Good morning, everyone. I hope that you are doing well. Welcome to this new lecture of the Uncensored series. Here we're on the 15-minute chart of NQ, and as we can see, NQ has just been repriced into this M15 CB, as you can see. I'll be looking for a shorting opportunity from that M15 CB. We have traded above the previous day high by trading into that CB, and we have taken out the CPI high. Therefore, I'm anticipating a shorting opportunity to present itself soon. I'm gonna go short right here, and my stop will be above the previous candle's high. The reason why I'm going short right here is because we've just traded above the 930 open price and anticipating big downcross candles to come. I outlined within the mentorship form that the M15CB was my or is my point of interest to short of. The reason why is because that M15CB is actually a key point of interest since it is inside of this overall red box. And because it is the case, we are anticipating the market to form a high there. And what we see is that at 922, Nasdaq forms the high, whilst ES did at 924. So that's a very small SMT. Going to type big down close candles to come. The reason why I'm anticipating big down close candles to come is because of the following. We have taken out the buy side liquidity resting above the CPI high here. And therefore, where's a lot of sell side liquidity resting? Who has been making money all throughout this run higher? Buyers, of course. So therefore, we know that we can attack that sell side liquidity moving forward. So that's my overall thought process on this delivery. The higher time frame order flow is bearish and the overall weekly profile is still lower as outlined. So let's see how they're going to deliver. The reason why I'm trading in close proximity to the 930 open, by the way, guys, for your info, is something I already touched on prior when it comes to the overall anticipation of how 930 will deliver. But when we have 830 deliver in a, for example, a very aggressive manner due to the, let's say, CPI or whatever it may be, what we can anticipate is that 930 is going to distribute, meaning 830 will be the manipulation when 930 will distribute. So in this case, the run lower was actually manipulation already to go higher. However, the run higher into that M15CB, into that point of interest, was also manipulation to eventually go lower because the overall thought process is that we should go lower on the higher time frames as I've been framing to be the idea for this week. What I like about this sell side liquidity pool right here, by the way, is that the low formed actually in advance of the current daily low. And there's a false SMT between ES and NQ relative to this low present now. And a false SMT occurs when there's a Kraken correlation which is against our overall draw liquidity. So in this case, the draw liquidity is of course below market price, as I've been outlining to you. Therefore, we can anticipate that the market is going to basically try and basically false or basically fade through all of those false SMT, all of those false algorithmic signatures that might signal that, oh, we're gonna go higher. And that's very important to understand. We only look for SMT when it's in line with our overall idea. Since the anticipation for today is that we're going to see a down close day, that we're going to see lower prices, we want to try and go short in close proximity or above the 930 and 830 opening price. The 830 open price is right here. So let me just annotate it for you. This is the cycle open. At this stage, it's just a waiting game. Monitor this CB right here, which is formed. Preferably would like to see it get left open, but it's allowed for the mark to retrace into it. The CB here. Price should not displace above it. If we displace above it, that means the idea is invalidated. This is actually a opportunity to pyramid onto this position. So I'm selling 2 contracts more short and I'm throwing my stop. It's possible that we're forming the high of the week in this area. So what I'm already thinking is that if we draw towards the self-set liquidity pool, which I've annotated, I'm going to take the majority of the position off there, but I'm going to leave a runner for a longer period of time because I want to capture the longer range as well if possible. And that is what you guys need to understand is that since the higher time frame order flow is bearish and we're having the idea that lower prices are likely going to be next, meaning we're anticipating lower prices on the higher time frames, we can look to go short near the high of days because we anticipate that every single run on buy side liquidity is manipulation, as you can see here. Beautiful reaction of that CB, and there the big downward candles are coming. Do you want to hear something sick, by the way? Let's take a look at 10-minute cycles for a moment. At 9:20, right here, a new 10-minute cycle opens up. I want you to see that we take out the high, which formed right here, shortly after the open of the 10-minute cycle. When we do so, it's a sign that manipulation is taking place. When the market then displaces below that 10-minute cycle's high, and we see in this case a CB get created, when we reject that CB and we trade away from it, it's the signature that order flow is bearish, and this is how we align ourselves with IPTA. And you need to see that we have the following. If you look at this low, what is this low? It's a bearish breaker. We have a high, low, higher high, lower low. So therefore, this down cross candle should function as resistance on price. If you pay attention to this right here, this down cross candle, and you extend it to the right, what you can see is that that down cross candle is functioning as resistance on price beautifully on the bodies. The wick goes above it, but notice that the bodies are beautifully finding resistance inside of it. Pay attention to this up cross candle here. ES is already in close proximity to the low of the CPR release, whilst NQ is not. That's not something I'm a fan of. But let's see whether or not this CB is going to continuously function as resistance from price. Macro window is coming up, so let's see how they're going to utilize that. Pay attention to this BC here. This is likely going to be a false BC, so therefore the market might find a short-term support inside of it, but it's likely going to slam straight through it soon. You need to understand that imbalances are not like patterns that we trade every single time. We only pay attention to imbalances that form in line with our overall idea. Our idea is lower prices. We anticipate the market to draw lower. Therefore, we anticipate every single discount rate to get violated. And as long as we do not displace above the CB in which I pyramided, it means that order flow is still bearish. And this is something I think a lot of ISTs traders struggle with, is that they think that simply because they see a BC form, they should just all of a sudden switch their idea of, oh, I was bearish, but now I turn bullish. No, absolutely not. You need to understand that the creation of that BC is simply a pattern in price. It's not narrative. The narrative is, okay, we went higher, drawing towards that M15 CB, and we rejected it right here. Look how the bodies are rejecting off that M15 CB's high. This plays towards the downside. So now we anticipate the market to draw towards the CPI low, which is right here. At this stage, all you can do is patiently wait. And this is probably where some of you struggle. You try to overthink. You try to really, just try and justify reasons to get out of the position. Guys, as long as we do not displace towards the upside, order flow is bearish, and I must stay in this short position. This is all time distortion. What IPDA is doing is that it's waiting for the time to be right for the market to begin to expand aggressively towards the downside. And that right there is something that you need to log, you need to journal, you need to literally say to yourself, okay, I know that this is the draw liquidity, meaning this level right here is the draw no matter what. Price is not going to stop, or IPDA is not going to stop until it has met that level. If it stops in advance of that level, displays towards the upside, then that shows that the underlying idea was like wrong. But because we still believe that the order flow is bearish, I want to be short and I'm anticipating lower prices. And there the big downward candles are coming. This is a good partial for me. The reason why I want a partial here is because I can see that we have, of course, the discount BC, which we just traded into. If you look closely to the left right there, we traded into that discount BC. And you can also see, well, I don't have the other chart on here as well, but ES already took out the low whilst whilst NQ did not. So that's always a sign for me to take a partial as I outlined. Going to take one more partial. I'm going to leave the remainder of the position running. And the reason why I'm typing this out is because I need you to understand it in the recording as well. When you watch this visually, it's very important that you understand why I partial where I partial. At this stage, the market could literally just form a low here and begin to draw towards the upside. If that occurs, then my idea is off. Then my overall analysis for the day is wrong. Do you think I care about that? Do you think I get upset about that? Do you think I would think, oh, well, I'm so bad? Now, imagine that we would form a low here, and the market does, in fact, begin to displace towards the upside. And we see the market begin to really run higher, and my overall analysis for this day was wrong. Do you think I would be happy with the fact that I recognized signatures that the market potentially forming low here to then draw higher and have not taken a partial? Of course, I would be upset about that. We take partials at logical levels, and that is something you need to understand. Pay attention to this CB right here. See whether or not we're going to reject it. If we're going to reject it, then it means we're likely going to slam lower. If we displace below the BC which I've annotated, or the sequence of BCs want to function, or to want to see them function as inversions for value gaps on price, and then that means to me that we're likely going to see the market draw lower, trading into this low right here. Let's see whether or not they're going to continuously draw towards the downside. If the market begins to displace higher, and we begin to see the market begin to create discount race, then the overall idea of lower prices is invalidated. But I'm really enjoying the fact that we are rejecting this CB right here. Let's see if they will slam it through this BC and see whether or not it's going to function as an inversion for value gap afterwards. Notice, by the way, that we reached this candle right here, the 845 candle, at the macro window, at the next macro. That could be significant. Writing in the Telegram channel as we speak. Nice shorting opportunity from 9:30 open into the discount BC of 845. Let's see if they displace through it and utilize it as IFVG or form a low here. Partials have been taken. So at this stage, it doesn't matter anymore. Let's see if they're going to use this CB still as resistance on price. If they won't and displace above it, then it means I'm going to look to see whether or not another partial should be taken. What's very important to note, by the way, guys, is that when we pay attention to this sequence of imbalances here, and we align that with the time at which we trade into them, I want you to see that that sequence of imbalances formed during the previous macro. We repriced into the range of the previous macro during the current macro. And let me just share it. This red box, yes, that I've been speaking about. It's the hourly candle of Friday's 9 a.m. session. We're right now in the 9 a.m. hour, as you can see on the hourly chart. From 9 to 10, we're delivering right now. If we are going to see lower prices originate from that red box, it's going to originate during this time window. The fact that we formed this high at 9/20/22 to me was the confirmation of, okay, we're likely going to roll over and draw towards the downside. Pay attention to the sequence of imbalances here. And that's right there, guys, is step down. It's the alignment of specific time-based candles and utilizing those candles or those ranges, those time-based ranges in the future during the same time window. All right, let's see if they're going to slam it lower. Nice trading below this low already. No real closure outside of this sequence of imbalances just yet. Let's see if that will come soon. If it will come, then I anticipate very big downward candles to come soon. This is trade management, guys, by the way. This is how you look at managing your positions and looking at, okay, how should I, um, how can I describe it the best way? Let me just try and find a way to articulate this properly. When we're looking at managing our positions, what we're looking for is actively, okay, what ranges are we monitoring? What levels are we monitoring? When those levels get reached, the reaction to those levels will be very telling. In this case, what we saw was that we reached this discount BC that which got formed during the previous macro. During the next macro, we reach that and we see a cracking correlation relative to this low take place. Therefore, we understand that those are already two warning signs of this sequence of imbalances being a crucial range to monitor. Do you want to sit through all of this and potentially risk the market forming a low here to then displace towards the upside and run against you? Of course not. Therefore, we take partials. Partials always freaking pay. Don't listen to anyone that tells you that you shouldn't take partials because they don't know what they're doing. You need to understand that when we take partials at logical levels and we get out at logical ranges, we know that, okay, we don't care anymore about what the remainder of the trade is going to do. If this rolls over and draws towards the trailed stop, I'm okay with that. If this continues towards the downside, then it will be nice, but either how I'm paid for the day, and that's what matters. I justified a high probability trade setup, and that is what I'm looking for. That is the only thing I care about. I don't care about anything else, and that is the mindset you should adopt. Notice the rejection at 935 right here when we traded below that BC. We formed this low and we then traded above it. That's something I'm not a fan of seeing. Let's see how they're going to utilize this CB. It's having a hard time with displacing through this sequence of imbalances here. 10 o'clock open is coming along. Let's see how that will get utilized. ES is already rolling over whilst NQ isn't just yet. Beautiful rejection of that CB again. Yeah, order flow is still bearish as you can see. I really want to see them displace below this sequence of imbalances though. So that's the only thing that I'm monitoring right now. If we don't displace below that sequence of imbalances and begin to see the market displace towards the upside, then I will take a partial again. There we are seeing a big down close candle, and this is what we want to see. Let's see if they manage to close below that sequence of imbalances. At this stage, I want to see that sequence of imbalances function as resistance on price. Pay attention to this candle's low, right here. Might be potentially immediate rebalance, which is being set up. 10 o'clock open is upon us. Very curious to see how they're going to use that 10 o'clock open. For immediate rebalance to be valid, you don't want to see the market basically trade above 50% of this candle's wick. So here we can see the market trade all the way into the higher part of that wick. Does that make immediate rebalance invalid? Well, the ideal immediate rebalance takes place between the low and 50%. Here 10 o'clock comes on. Notice how they retraced into that sequence of imbalances, utilized it as resistance on price, and how they're now slamming it lower. I anticipate the market to draw all the way towards the sell side liquidity pool. When we reach that sell side liquidity pool, I'm going to take one more partial, and when that partial gets taken, the remaining part of this trade will be left as a runner, as I outlined, due to my hard time frame analysis. So come on, NQ, draw towards that low. You know you want it. Next candle is like going to deliver it, or the candle after. Patiently waiting at this stage. Notice we took out sales at liquidity resting below these relative equal lows here. Let's see how we're going to reject of that. If the market would now displace back above that BC right here, that sequence of imbalances, that would make me lose interest in the overall idea of the market drawing towards this low. I want to see it draw towards that low soon, because ES has already taken it out whilst NQ hasn't. And that's of course how I manage my positions. So this is a retracement which is taking place into this upclose candle right here. That's a partial for me. Trailed stop will be trailed more aggressively, and that's that. Reason why is because I'm not happy with the fact that we traded above the 10 o'clock open once more. Is it possible that we're going to still draw towards the downside now? Yes. However, I'm not a fan of this rejection after taking out these relative equal lows, after trading into this long wick, whilst ES has already taken it out. So I'm just going to monitor if the final drawing liquidity will get attacked, and if it will be attacked, then that's good, but I'm going to leave the remainder as a runner as I outlined. The only reason why they might reprice it above the 10 o'clock open here is because they want to offer the smart money the opportunity to go short once more above the 10 o'clock open, above that new cycle opening, as you know, to then go lower eventually. That's the only reason why you would reprice it again. All in all, still a good area to have taken partials in this BC here, as you can see. Notice how I'm actively monitoring potential warning signs that might be present, and how I utilize that to gauge order flow. That's something I want you to take away from this recording, from this lecture. It's a key lesson. At this stage, price is consolidating inside of this sequence of imbalances, as you can see here. And there we are seeing the market begin to run towards the upside. Let's see if it's going to draw towards the stop, yes or no. Preferably, I do not want to see a closure outside of the range of this sequence of imbalances. In my opinion, it should just keep on closing inside of that if the order flow is still bearish. I'm not upset about the fact that I missed the partial opportunity here. Is it my fault that I did not recognize that this might be a low formation here? I'd argue so, yes. Now that I look back at it, it's obvious for them to retrace deeper after taking out these relative weak lows, trading into this wrong wick whilst SMT is present with ES. But I'm human and that's just, that's the game. I was already happy with the partials taken, like outlined, so did I leave some money on the table? Yes, but it is what it is. Like, you can't be upset when you take a partial. Just journal it positively always. Like, there's no point in you trying to basically be mad at yourself because that right there causes you to behave badly the time afterwards because you're going to think to yourself, well, I'm such a failure, blah blah blah, I'm a mistake and all of this stuff, and that's not true. So let's see how they're going to utilize this sequence of imbalances. Notice how the bodies keep on respecting the higher part of it right there. Might be wondering what else could be a draw on liquidity. Well, if we go lower a bit, we can see that sell-side liquidity is resting below this low. So therefore, if we are going to see the market still draw towards the downside, the market might want to gravitate towards that sell-side liquidity pool. Until NQ catches up to ES, order flow is likely going to be messy, back and forth delivery. So far, really enjoying the fact that these bodies kept on respecting that sequence of imbalances here. So I'm anticipating the market to still draw towards the downside. The wick right here went above it, but notice that the body goes the side of it. Something I've really been experimenting with lately, by the way, is the raw recordings, such as, of course, within the Uncensored series it began, but also with the reviews, with the psychology lectures and such. And it's good to see that so many of you are actually enjoying the series that much because it shows to me that, like, creating raw content, it makes it feel more personal as well. Like, when I create lectures and such, and everything is I perfected every single slideshow. I know exactly what I want to discuss for that slide and all of that stuff. And when I make a fuck up, I can just edit it out. But in this case, I just want to keep it as raw as possible because that way you can just really try to get that internal dialogue that I have with myself when I'm looking in front of the charts. And it's just important for you to see that, man. Let's see if they're going to run it lower now. Now that we've traded away from that sequence of imbalances again. and we've closed below it. We've traded above the 10 o'clock open, spent some time there, offered smart money the opportunity to go short. If the draw liquidity is still lower, they're likely going to run it lower soon. Because you need to understand the timing elements behind IBDA. IBDA is going to seek to reprice towards liquidity when the time is right, meaning when the time is right for the market to begin to expand into a one-sided direction. Unless my reading of IBDA right now is wrong and we're forming a low here, I anticipate us to still draw towards the sell-side liquidity pool. But do you see how I basically utilized that Kraken correlation between ES's Nasdaq to recognize this back and forth, back and forth, back and forth, this chop? That right there is trade management. That right there is environment recognition, and it's very important. And here we're seeing the market slowly begin to draw towards the downside. Let's see if it has what it takes to reach the eye. ES took out the previous day low, whilst NQ hasn't yet. That's something to look at. I need to see NQ really begin to roll over soon. Create a new smaller CB here, as you can see. It's very tiny, but still a valid CB. Pay attention to it. Now, if NQ would not find resistance inside that CB, then something else is going on. So far, the direction to that CB is good. Retrace into that. Wick goes a bit above it, but notice that it immediately begins to slam lower. I want to see it to really begin to expand and just pull towards the downside at this stage. I really don't want to see it spend any more time since the macro is always also coming to an end. So if it would displace above that CB, utilize their support and price, that's a warning sign. But the fact that they're engineering more and more sales liquidity here is making me like this sales liquidity pool here even more, because you need to understand as well that when we have a sales liquidity pool that we're targeting and we see the market stop right in advance of it, that right there shows to us that what they're doing is they're engineering more sales liquidity for a later point in time. The question then is, however, is that sales liquidity being engineered for a later point in time, it being, for example, the next 10 or 30 minutes or whatever, or is it for in a few hours or in a few days? And that's the only factor that we cannot control, and therefore we need to manage our trades accordingly. And that is why we also recognize signs that might signal to us order flow is getting nasty here. And when order flow is getting nasty, the best thing we can do, of course, is protect ourselves from that. Note how the market is continuously rejecting the lower end of that bread box. You tell me that this is buying and selling pressure exactly from the price level that I outlined to you 2 days ago. That right there shows to you that there are specific levels that IBDA keeps on referring to. And that is a crucial understanding which you must gain. Pay attention to this long wick here. All right. There we're seeing the big down close candle come. Let's see if they trade towards this row. Let's target met. And if it's going to draw even towards the sales liquidity pool here, that's going to be even more aggressive. And perfect. Let's see how they're going to reject off that level at the end of the market window, as you can see. And that right there is going to be my full close. Perfect. That's this idea done and dusted. That's the previous daily low taken out. It's possible that this was the high of the week here. If that is the case, I'm going to look for more continuation shorts later. And with that being said, I hope that you found this lecture insightful. I'm not going to be recording the whole daily session. It's going to be way too long, in my opinion, and therefore it is what it is. I hope that you found this recording insightful. This is this execution done. I look forward to catching up with you soon. It was what was it? Like 40 minutes or 45 minutes probably right now. The audio was a bit different, of course, because I use a different mic, but besides that, everything was all right. I look forward to catching up with you in the next one. Please be safe, and I'll speak to you later. Bye bye.